Market conditions majority bullish this morning, 14-0 on SP futures. We're seeing those futures at 0.22 this morning. Small increase, relatively flat here the last 4 or 5 days after we had a sell-off and then a push back up out of this demand location. We've got expanded trend, getting a little bit of compression here at the top where we are seeing a little bit of internal selling happening. Let's take a look at the internals of SP 500, number of stocks above their 50-day moving average. Majority bearish right here, compression, and sitting at 53. So we have 53% of stocks in the S&P that are actually trending above the 50-day, which means we've got about half of them that have bearish trends or trends below the 50-day moving average. That is relatively weak in terms of internals. So the question is going to be, what is holding the market up right here? Is that the handful of mega cap, large cap names, and that's it? And we're getting others that are starting to retrace, and the majority that are going to retrace. That's going to create some additional bearish tone for the market if we are getting more and more internal stocks that are continuing to move to that downtrend right here. That's a part of the concern at these levels. Number one, we're expanded, we're elevated in trend. We've had a pullback. We've had one little blip now that we can say, okay, there's some selling starting to happen here, some distribution happening based on the expansion and the location of the trend. These trends just don't last forever. What we don't know is how long they can continue to move higher and what kind of retracement we can get to prove where the demand is at. Do we need a retracement all the way back to here for new demand to show up? All we needed this last time was for demand to come back to this 6250 range and then start to push back up again. That more than likely will be retested. We'll see if that holds up. If not, we'll be watching for that 6000 range. That's still in the momentum zone, so we're still being a bullish trend, but just looking to see if there's going to be demand coming back in on any kind of a pullback or dip. Okay, that could also work the other direction. We could get a kind of a euphoric move to the upside and then create some additional liquidity for additional institutions to be selling into that liquidity. We'll see if that happens as well. Nonetheless, that's kind of where our risk profile sits for the market. We're seeing VIX, which is also pulled back. It had that move higher with that sell-off in the market a couple of days ago, back up to the 20 range. It's pulled back to 16. The low range has been around that 14, 15 range with this recent market activity over the last few months. And so a couple of spikes there, meaning that there is, again, there's just a little clue. There's some selling here. Obviously, we can see that selling in the market, but demand has just been coming right back in. Not a lot of fear happening in the market as of right now. Dow Jones Industrial Average running into the supply block, and we've actually had another tick down there. That was 12 yesterday, so moving to 11. So a part of that internals, some of these Dow names, these big mega cap names may be starting to weaken or soften in the upper end of this range as well. Something again, just to be aware of in terms of the overall clues of the market. We know, I mentioned this yesterday, we're basing part of the decision off of the expansion of trend. How far, how fast, where have we come from, where and where are we at? We know that when we start to get expansion, the expansion doesn't last and we start to move back towards compression. We're starting to see that at the upper end of the trend, and we're starting to see that in some of that. The S&P, obviously, there's more names in that index, 500 names versus 30 names. So the 30 names in the S&P or in the Dow Jones Industrial Average starting to show some weakness right here as well. That helps us determine how do we want to manage our risk overall in the portfolio. Do we want to be exposed? How much? What percentage do we want to be exposed to the market right now? 10%, 20%, 50%, 100%. Depends on the strategy. Our methodology primarily is holding long equities and then moving to cash when market conditions become a little bit weaker. Instead of going long or going short, that's certainly a fantastic strategy, but we got to pick our lane. In this case, we're focused on long only momentum trading in bullish market environments and moving to cash when that's not the case. So we've got that, but we're up the upper end of the range. We've had this run. Now we're getting some softness. What that means primarily is, again, how our exposure, the position size, how we're managing our stop losses and so forth. Triple Qs, we're seeing that strength here as well. all-time highs still in technology. It's got some distance between it's not a new high, but it might tick up to that new high today. If it at least could open in that range, we'll see. The retracement back to 5 for 33 is the momentum zone fib retracement location. IWM, these are our small cap names. Russell 2000, 12 and 2, relatively flat, starting to compress right here in trend. All of this market volatility that's happening in price action. Ultimately, price action rules. That's really the only thing that we really care about. But sometimes some other indicators will help us see where that price activity has been and where it's at currently in relation to where it's been. Again, that's that whole past performance doesn't anticipate future performance or guarantee future performance, but we know that markets, when we're dealing with trends and mean reversion, meaning averages, markets will typically move back to an average. When they're expansion really wide, you get compression, you get really wide to the upside. It's just that cycle. It's that rhythm that happens over and over and over again, to the upside, to the downside, compression, expansion, and that's really all it does. That's really all price is doing is just moving back and forth all the time, all day long, looking for real-time price discovery. And it's just simply, what do all market participants believe right now? Well, they don't. They only believe, or we only care what they believe when the money is on the table, when they've actually made the decision, meaning they've bought or sold. Then it shows up in price. Then we can analyze what's happening to price as the market as a whole is making decisions, and we want to be a part of what is happening there, or at least analyzing what the market is doing. Let's jump over to USO. We're seeing that here as well. Continued weakness, majority bearish on oil, and we'll see if we get a little deeper retracement. 50% retracement is that 72 range. Deeper retracement back to that 618 location. Again, what we're looking for in terms of the trading entry and the locations, we want primarily a momentum type trade. There are other ways to be able to enter retracements into the corrective zone, looking for demand structure happening at deeper levels. When you have a deeper retracement or corrective, it exhausts all of the selling. At some point, the selling is exhausted and there's no more supply. There's just new demand, and those can happen inside of these ranges. So these become some areas that, if you can look for areas of reversal. And so we're inside of that zone, trending to the downside. That's showing some weakness. So we'd be fighting a trend by trying to buy into some of those dips, looking for a retracement pattern. But oil is, oil's a pretty choppy one to trade right here as well. Gold, let's take a look at this. This one's been a nice, good momentum trade over the last few years and continuing that overall pattern. 313 to the upside, inside the momentum zone. Compression this last 6 months or so at the upper end of that trend. We can see that on the weekly time frame also, as it's just been consolidating, really wide expansion on gold. And dollar also showing the kind of the inverse pattern there as well. We're seeing interest rates, the 2-year tick back up to 375 this morning, still in an overall downtrend. 10-year treasury also showing a little bit counter trend move here at 426. Majority bearish on the trend, so we want to factor that in as well. What are rates doing? Are rates trending higher, trending lower? And right now they're trending slightly lower, partly because of the employment numbers that we saw, maybe a little bit of anticipation of some weakness in the economy starting to happen. Lower interest rates create a little bit more lubrication for the money supply to increase. Cost of borrowing comes down. That allows for more borrowing and infrastructure and capital spending. So what interest rates are doing are important because the market can either freeze up or really expand. And if the bond market believes that we're moving into kind of a slower economic position, then it'll show up in the price activity. Stocks may or may not follow that activity, but all of these indicators are simply just for us to look at what's the current market condition and how should we be positioned to be able to move forward with what is happening currently. Let's jump over a couple trade ideas. Granite construction, nice confirmation bar, big volume as it's moving higher. We're also seeing a nice price pattern in SLPD. This is a really nice pattern in terms of the overall trend higher, deep retracement coming back in. 50% retracement now with some confirmation of demand. You've got big volume pushing it back into momentum. That's also a nice looking price pattern for today. That'll do it for today's update. Everyone have a fantastic day today.